Hello friends, welcome to today's video where we will discuss Nifty and Bank Nifty once again. Now friends, I am making this video after the close of market hours today, that is Tuesday 5th of September 2023. Now friends, if you see my yesterday's video, I had suggested that I think Nifty bulls will make a dash towards 15,600, and this market in general looks to me to be range bound for the next few trading sessions, and the downside looks very limited to me. So I had been suggesting that we can either stay long with a proper hedge or sell a straddle for both Nifty and Bank Nifty. Now the market is actually playing out just the way I have been predicting. It is not that I'm trying to tell you that I'm a genius. I'm just trying to tell you that the way things are unfolding, it has been just the way I have anticipated them to be. So let's look at this Nifty chart. Now, this is the daily Nifty chart that we have on the screen. Now, look at the recent high for Nifty that we made on 24th of August, which you see in this particular candle. Now, the high was 19,584 and today's high is 19,587. So roughly 19,600 is where I was anticipating bulls will find some resistance, and that is what happened in today's session also. Now, as I've been discussing, 19,250 looks to be a very solid support for Nifty bulls. Look at the number of times we have been bouncing off from 19,250 odd levels. See over here. So this market actually now seems to have bottomed out at 19,250. Nifty bulls are now currently trying to get past 19,600. 19,380 odd levels, which was the resistance on the way up recently, as you see over here, is now the support. So very broadly, you can say that Nifty is currently range bound between 19,400 on the downside and 19,600 on the upside. Now, what would be the most appropriate trading strategy in this current environment? See, when the market is actually sideways with no big up move expected and neither is a big down move anticipated, I think there are just two trading strategies which probably will make some money for you. One is to sell the straddle, and the other is to stay long with the right hedge. Now let's discuss both of these. Now see, if you sell the Nifty straddle, that is you're selling both calls and puts of the same strike price. Now your idea of making money is if Nifty remains range bound. Okay, the total premium that you have collected, if Nifty remains within that range, then you are going to make money. The risk of this strategy is that any big move that may come, which is beyond the total premium that you have received, you are likely to incur losses. So you need to hedge uh, these positions so as to not incur any big loss. Now, every trade in the market is going to carry a risk, and you have to know how to manage the risk associated with that position. Now, the second strategy that you could adopt is probably to stay long on this market. Now, staying long on this market, and that too when the market is range bound, you may again lose money if the position actually uh, that you have created actually on the long side if the market happens to reverse. So what I was suggesting is that you can probably sell an in the money call, or sell and at the money or out of the money call. Now the downside of this strategy is that your profit gets capped to the premium that you have received. So whatever is the strike price that you have chosen, okay, for which the call you are going to sell, now that strike price plus the premium that you have received, that is the maximum that you can actually make in this strategy. Now the other way to hedge your long position will be to go long on the put, that is to buy a put. Now the problem with doing this is that the premium decay that is going to happen. So your hedged position will actually lose money. Okay, so your long put is likely to actually erode in terms of the premium decay that will happen, and therefore you may still incur a loss even if the market remains flat. So in that, in or rather in this scenario, you actually need a move much higher than the premium that you have paid to protect your long position. So between the two, I actually prefer selling the call for the long position that we have created. Now you must have a manageable position size when you're trading futures and options. Now this is already a leveraged product. Now within that also, you have to know what is the right position size considering the capital that you have and the hedge that you intend to take or create. So friends, now tomorrow we have the expiry for Bank Nifty, and the Nifty expiry remains on this Thursday itself. So for Nifty, I again think that somewhere around 15,000, sorry, 19,600 odd levels, Nifty is likely to remain in a choppy zone. No big downside is anticipated. Now today's low is 19,525, high is 19,587. So broadly, Nifty has moved in a 70 to 80 point range today. I think this is likely to be the scenario over the next two trading sessions also. No big move anticipated. Now bulls have already cleared the hurdle of 19,380 odd, and now they seem to be consolidating. So this is for Nifty. Now let's take a look at the Bank Nifty chart. Now Bank Nifty also, like Nifty, looks to be range bound. Roughly, very broadly, Bank Nifty is now trading between the 44,300 odd levels on the downside and 45,000 levels on the upside. So it is capped between these two levels. If I can show you this on the chart, see roughly 44,300 odd is the support and 45,000 odd is the resistance now. So this is the candle on 24th of August, that is last Thursday, or rather last to last Thursday, when Bank Nifty had made a high of 44,949, and if you see this Monday's trading session, Nifty made a low of roughly 44,300 odd. So now we seem to be oscillating between 44,300 on the downside and 44,900 odd on the upside. So broadly a 700 point range for Bank Nifty. So just like Nifty, probably Bank Nifty also is not showing any major move on the upside. Neither is it showing any move on the any big move on the downside. So this also looks to be range bound. So just like Nifty, you can also adopt a similar strategy over here to trade. Tomorrow, that is on Wednesday, 6th of September, we have the weekly expiry for Bank Nifty. So I expect an extra dose of volatility to come in tomorrow. You can, just like the way I suggested, you can trade Nifty for this expiry. The same strategy you can apply for Bank Nifty also. Sell the straddle, hedge your positions. Uh, Even if you sell the straddle or stay long with the hedge, for your long position, you can either sell an in the money or at the money or even an out of the money call, or maybe you can hedge it with the a long put also. Now, friends, keep in mind that every trading strategy carries a risk, and you need to evaluate that risk and then take your trading position, you have to be very conscious of the position size that you trade, because this is a leveraged market. Future and options is a leveraged market, and you need to understand the risk associated with the position size that you are taking. Now, friends, whatever I share in my videos is purely educational in nature. It is neither an investment nor a trading advice. I just share my thoughts candidly on the market. Do your own research and trade always. The standard disclaimers always apply. I wish you good luck in your trading. Until my next video, take care. Cheers. Thank you for watching this video, and I would request all of you to subscribe to my channel. I intend to post at least one video each day after the market closes. Thank you once again.